topic here is from compliance to competitive advantage, rethinking regulation. And yeah, our panelist here is from executive director, who is the representing the Samunnati Financial Limited Services Private Limited, Mr. Gurunath. So, first of all, Gurunath ji, tell me how has been your experience in this whole day here. You have been listening to various panels, speakers.
Thank you, Ravi Gupta ji. First of all, I would like to extend my heartfelt thanks to Mr. Ravi for running this program so successfully for not 1 year but 11 years. I do not know how many of you know. 1 and 2, it's not one program per year. It is one program per month is what he is running. So he deserves a big round of applause from all of you. Because I've seen even big organizations doing one annual event per year, but finding it difficult to do it with so many challenges and caveats. But really kudos to Ravi to get so many people together. And every time I see different people, every time I see different sponsors, there is new blood, new thought process. So I really feel the credit goes to Ravi. Thank you, Ravi. Please continue to do your good work.
Thank you so much. And I think the whole ecosystem has been supporting us. Like there are speakers and experts like you who are joining us, and there are like delegates who are as much interested in listening to these experts and actually growing with the experts. As our speaker, Mr. Jagdeesh, has like joined, and who is the Chief Business Officer of Aumnee, right? Yeah. So welcome, Jagdeesh. And our topic is from compliance to competitive advantages, rethinking regulation. So first of all, how important is regulation for the NBFC sector? Is it necessary? Is it needed or not? So you start with that.
Yeah, it's a very interesting question, right? I keep getting asked this question quite a lot. Personally, to me, regulation is quite important because it gives a sense of direction and guideline for people to operate. Now, there is, in my personal book, nothing called too much regulation. There are regulations laid out for safety of the end customers and the NBFCs and everybody together. We have seen so many markets around the world. If you really look around in Southeast Asia, when you look at Eastern Europe, so many economies have collapsed because they did not regulate those markets strong enough. So personally, to me, RBI has done a really wonderful job in keeping the economy going together, allowing what is necessary to be allowed, and putting the right set of rules and regulations to make sure that it doesn't stem growth, but it also safeguards everybody's interest. So in my personal humble opinion, regulation is necessary, and that's something which changes from time to time. I would personally not fear it because it is something that has helped us as a country and as a region. So that's how I look at it.
So I will request our speaker from NBFC, like Gurunath ji. The RBI like regulations are like evolving every day, and sometimes people complain about over regulation. So are we like over regulated in this NBFC sector, or are we under regulated? And how do we NBFCs catch up with the regulations?
See, first of all, from my side, if you look at regulation is nothing but a set of people doing a set of activity has to be done in a certain way. Is regulation. So we have to be very, very simple in understanding it. It is like a traffic signal, which makes there are different people on the road. Somebody is cycling, somebody's in a two-wheeler, somebody's in car. But then the signal makes people to stand, wait, and then when the green signal comes, to proceed. So that is the way regulation has to be seen. 1. 2, in the evolving world, you can see from people doing a small personal loans to big ticket loans. The spectrum is very big. Now, if you don't have a regulated system, it would be very difficult for the regulator to monitor what is happening in the industry. 2, for the own companies, you cannot have the set of rules driven by the respective companies. So there are certain standard things which barest minimum a company should follow. would come under the regulated complaint. So that is, so to answer Ravi's question, it is required. But the point is, nobody is forcing you to be complained to that level. You can be still more complained to make you comfortable. Like if the pass mark is 45, doesn't mean you should score only 45. You can always score 100. So it is up to the organization to decide if they are going to be complained to the expected level or they are going to be more complained to be on the safer side.
So, as a Aumnee, as a digital native NBFC, how do you see this the usage of IT and usage of like regulatory technology tools? So, how do you use it for increasing your speed and increasing your compliance?
So Aumnee helps NBFCs and banks alike with our platform. Whenever there's a regulatory change, the first thing we observe is what does it mean and what is the real requirement. So the moment we understand it, we make those changes in the system. So in a simple sense, our customers do not need to worry about regulatory changes. We will be always compliant and future ready for those changes. So I will break this down like how Guru sir said about traffic. I will also go one step ahead and say if your normal regulations are like a traffic signal, your data regulations is like your air traffic controller. You can just allow data to flow without anything because data is where the new information thing is happening. A lot of good rules are coming in that you cannot have the localized data going out, you cannot have sensitive data flowing out, you cannot access data, primary data, accessor, who owns the data, who's the controller. All of these are very necessary things. Now, when it comes to platform, again, because decisions and credits are done in such high speeds. Today, customers are not giving us enough time. What they're looking at is, I want to come in, put my information. The moment I press the button, I need to get the money. So when you're living in this warp speed environment, unless your platform is also regulated with the necessary things, you don't want a hacker to come in and put in the information. You don't realize that it's a fake person, and you don't want to disburse money to him. So how do you find that? So I think the system regulation from that perspective is equally important, and that's how we have built our system. It has to be foolproof. We do our dedupe, we do our checking, we do the alerts to our users saying, hey, what this looks like a fake case, just think twice. Or if there is a flag alert which is there in the market, we pick it up and also show it to our users. This looks like a serial defaulter. So be wary of what you're going to get into. So those are the ways that we support our customers. And despite all of these things, I think for clean, clear customers, the loans have been disbursed faster than ever. The market has always moved in that way. From 1 hour, things are now in a matter of few minutes. I think that's how the market is also evolving.
How do you see the role of IT and AI in handling regulations and their compliances in a faster manner?
See, if you look at regulations over a period of time, earlier the focus was more on the organization. Now the focus has shifted from the organization to the individual client. That's the paradigm shift which has happened. So most of the compliances are ensuring today that the end customer is happy. So you look at digital lending norms, it very clearly says you have to be transparent, you have to be taking data only wherever it is required. You cannot use the data more than what purpose he has given for. To where earlier they'll take 10 photocopies of your KYC document. You will not even know for what purpose it is used. Maybe the 9 would get moved to some other place. Third day, somebody will be calling you from a mall that would you want this, that, and vagera, vagera. So all that I'm telling is, this is one side. The second side is for an NBFC, especially a company like Samunnati, where we are into the field of agriculture. It's seasonal. It's completely non-templatized. I cannot templatize even say a loan to a turmeric farmer, because the turmeric in Erode is different from a turmeric in Madhya Pradesh. So I cannot templatize. So in such scenarios, we really foresee that the AI should really chip in to understand and tell, this is a month where you can give money to a turmeric farmer in this geography is what the system should tell. Is what is the expectation from a layman like me. I'm not a tech guy, but I am always enthused to see how the system would help us so that we can be proactive. Like I'm sure people from Odisha are here. Every second year there is a cyclone in Odisha, and now the state is so geared that they are just waiting for the cyclone to go, and then they start their normal life. So we can clearly see in the last 10 years. Earlier there used to be so much of loss of lives, loss of properties. To today, it is beautifully controlled because they have understood how the cyclone is going to behave. But that is through experience. Now that has to be replaced by your AI, where AI should tell what is it you have to do futuristic. Even in the signal example, I was telling during lunchtime to somebody, the signal should understand that there is a 2-kilometer traffic jam somewhere, and then start behaving in a way where it eases the traffic over a period of time. So Bangalore guys would be very happy if that happens. Is what is the overall expectation of AI. So to just add to Ravi's point, the future of any lending organization would be greatly benefited if this kind of AI come in, because you see the changes. We were into manual system to automation to technology to AI. So these are the 4 pillars I would say, because what we were doing manually was just made into automation. Calculators were replaced by small computers or Excel sheets, to a complete technology where we were, as a consumer, we were able to use. We did not go to the bank to draw cash, but we had ATMs at one end. To today, the digital technology which has come in, I can order a sari over a phone, pay through GPay, and get it through Dunzo. So that is how the technology has evolved. So a company managing especially hundreds of commodities at different geographies would really be blessed if the AI chips in and starts telling us how do we do business.
Fantastic. You are talking about managing any risks. You quote the example of Odisha. Let me ask Jagdeesh, you are representing Aumnee, you are an overall financial technology solutions provider for an NBFC. So give us like some examples that how your technology has helped NBFCs in mitigating risks, increasing compliances, increasing profits, reducing NPAs. If you have any examples which people will be happy to know.
More than happy to share that. See, I think the most important thing, like Guru sir said, our platform is built in a way to make life easy for our users. When I say my users, the NBFCs are the first level of users, but the real users are the end customers. Because if I do not think and plan for them, then the whole journey is failed. So one of the few things what you do is we are able to keep the whole journey seamless and simple. The straight through process, the qualified customers, how fast they can go. So that's something that we do really well. So the moment we realize the customer is on a green channel, we accelerate the decision making. We actually literally flag it up and saying he can be applicable for the best of the products what we have. And I think one of the other things we have done really well with regard to compliance is to ensure that we stay ahead of compliance, and with the help of our product, any compliant audit or reports, anyone who uses us, they've been more than happy with our performance, because that is the biggest nightmare I've seen with most NBFCs. I go and say, I know people who have employed something from tens to hundreds of people who are only working on these reports and compliances. So by putting our product, a lot of those people could be redeployed to actual skills where they're coming into the NBFC for. So we were able to do that quite successfully. We have automated quite a few of these compliant audit-related issues. But the largest being a very large NBFC from Mumbai, about 25,000 crore AM. Their biggest headache when their risk officer came back and told to us is, look, I have these different things I need to run, but I'm never able to automate it. So we had worked with them closely. We run a POC. The system is going live. We had a 99.4% compliance. The challenge given to us is, in the next 3 months, you need to hit 100. So that's the challenge that we've undertaken from them. So that's one live example we're talking about. And in terms of growth, Some of our products are so simple. It integrates very easily, seamlessly into the customer environments. Because it integrates so seamlessly, it does not create any disruption. So the moment there is less disruption and it's so easy to configure and to use, it also enables our customers to not change anything what they do. So that by itself is a blessing. Like highway, you're not having any unnecessary speed bumps on the road. So you're traveling faster, and we are also giving you the right alerts, like a Google map, like, there's something on the way, and the product works seamlessly without any unnecessary trouble, and that always results in growth. On an average, customers have grown about 20-25% year on year with our product.
Fantastic. So I will ask you a question that is AI a hype or it's for real?
Now, for me today, it looks a hype for the simple tech guys. Excuse me. So the reason is we are still not able to feel the benefit of it, because the difference what I could see is, if you Google, you get all the dumps. If you use a chat GPT, you get it in a formatted way. Nothing majorly I am able to see. I'm as a user, I am telling, but the way it is going, I'm able to see the path. So that's where I'm coming from. Is going to be path breaking, where the decision making will happen from the place. Like, if my air ticket booking is getting reduced from 4 minutes to 2 minutes, is more an automation, not an AI. But the AI system should tell me that, see, last 5 years you have been traveling in the month of June to this place. Would you like to book a ticket now, because we are in the month of May? If you book, you will save $1,000. Is AI as a user? Is what is I expect when it comes to even product positioning. So when I develop a product as a lender, the AI technology should come in and clearly tell me that how do I structure a product, including my compliance, including my regulatory, including my client's needs, club everything and throw an output which should be compliant in all respects. Then I would say AI has arrived. Maybe till that time I would say it is still cooking. Maybe in a, long, slow pot or a pressure cooker. I need to wait and see.
Sure, fantastic. Any questions or audience has anything? Any suggestions, inputs out there from you? You want to speak anything? Yeah. Ashif?
Thank you, sir.
So,
I think
first of all, let's applaud her for being the most active listener in the room, and her questions have always added value in the session. So thank you for doing that.
so inspired by you only. I attend all the sessions of Elets anyway. Thank you, sir. I think great energy and the explanations which you gave, I think all of us could relate to the real life examples. So thanks for the session. So speaking of compliance to comparative advantage. So what are some of the evolving areas which you see in terms of innovation, where NBFCs can evolve into, or in terms of techniques which they can adapt over time, staying within the regulatory boundaries? Basically, I'm speaking of aligning compliance with business, which is something which I face a lot of difficulty in day-to-day time, where business says, I work in risk management. So if I have to follow the compliance, right? So we have risk models. So business says, why do I have to comply with this model? Those are technical things we go into. Why do I have to continue to monitor performance of a model? What is the relationship? So what I'm trying to understand is, from an NBFC standpoint, what are some of the key areas where you think NBFCs can still evolve, innovate, even staying within the, maybe regulatory compliance will evolve over time as more and more techniques come in, like for AI, right? We have the AI Act which came in, right? Similarly, what do you foresee in the long term?
Yeah, that's right.
So it's my counter question to all the business guys here. You tell me, how many business guys involve the compliance and audit head in business planning? So that is a starting point of problem. So what basically happens is, business guy doesn't understand, a strong word, doesn't really understand complaints. He says it can be managed. It cannot be managed. So what happens is, a product is developed just keeping their numbers into consideration, forgetting client as well as complaints. So what happens? If it clicks, great, because client has accepted it, but there is a big issue on the compliance side. So now the business guy says, what is the problem for my compliance guy to manage it? The moment somebody thinks that something has to be managed, itself says that there is a problem in it. So the solution is forget technology. Technology is an enabler. If there is a PowerPoint, is an enabler. PowerPoint is not a solution. So technology is not a solution, it's an enabler. What we all should do is, when all stakeholders come together to attain the mission of the organization, if business plan is one mission of the organization, there has to be a compliance head, there has to be an audit head, there has to be a risk head, and then you structure a product, you design. If all of them come to a consensus and go out of the room, you will not have a problem either for the client or for the regulator, is my answer.
Excellent. You are interested to add this?
I'll just add a little point. Technology needs to get personal. That's something which I always say. Because the problem with having a risk model, your risk model is high level. It is designed for thousands and millions of users. There'll be always this one out of case, which is what the business guy will pick. He's saying, no, but the guy doesn't fall into this bucket. Now, at times, as a risk, you'll say, if it doesn't fall into bucket A, it has to go to bucket B. There's no straight answer to that. So I think that is where technology will evolve. It will start considering that gray area in between and make life easy for you and business and everybody else. So I think that's something which you can look at. Thanks.
Okay. Yeah. Any other point from anyone? Well, so I'm asking you this thing that the NBFC sector is evolving very fast and the market is expanding very fast. The microfinance sector is expanding very fast. So how big is this the market, and how much of it has been already tapped, how much is still untapped, and how much is this still opportunity for the microfinance and the NBFC sector? Like, if you can just throw some light on that.
See, I will restrict this question to the agri sector because we all should know that India is the largest producer of many commodities in the world. Maybe in some of the cases we are second, that's it. We are not even third in anything you take. Most of the pulses, commodities, milk, we are all first in the world. So when it comes to opportunity, there is huge opportunity for us to do business. What is that we want to do is what we have to decide. If we take a product approach, we'll become a lender. What we have done is we have taken a value chain approach. So we look at if you take a milk value chain, we look from lending for a cattle till curd. So whatever is possible, then uske baad you have paneer, you have ghee. So right from a 3-hour perishable product to a 2-year shelf life ghee, there is opportunity for us to do business in one milk. Now, if you look at all the commodities which is available in our country, the opportunity is humongous and there are no competition. There is no competition for anyone. That's the kind of market we are sitting on. All that we have to do is, when we have to really plan what is that we want to do, put customer first, see whether he is going to make money. Because unlike a template-based product, suppose let's take a home loan, you fix a rate at 8.85 across the country because you go by a fixed salary, some formula. But whereas a commodity doesn't get the same margin across. Maybe a paddy you could get 18% margin, but a jeera could get 15%. So I cannot have the same script and go to Gujarat to Hinduja market and sell my product to jeera customers. They'll throw me out. So I have to have customized area-wise product development in agri sector, but then that will give me new markets. So Raviji, to answer, there is huge potential. When it comes to microfinance, the household is a mix of agri and consumption pattern, because most of the microfinance customers are into agriculture. So money is only fungible. Today, the biggest problem the entire country is facing is they are over leveraged. So they are trying to serve their one loan by borrowing from the other loan. We were discussing with many MFA colleagues. So somebody was asking, what is the solution? I said the only solution is we should stop lending recklessly and understand how we can give money to their needs and not create new needs. The moment we understand that, cash flow based lending is the order of the day. Even in my MFA clients, we have to look at cash flows. But there is huge market. Again, to answer Raviji, India is a big country. India is growing. There is huge opportunities. But we should not try to meet our targets by giving money to the same customer again and again. Instead, we should find and see how we can increase their household income and lend to their activities rather than lend to their consumption. The market is there.
We are like ending the session here. Excellent inputs from both our panelists, and thanks for an attentive audience.